So if you're enjoying the chaos in the stock market and the economy as a whole, you're definitely going to enjoy the latest chaos going on in the real estate market. Most importantly, we're going to cover some of the data going on in the real estate market, some of the varying circumstances that are influencing the real estate market, and the type of moves you need to be making, whether you're a first-time home buyer or a current homeowner, or somewhere in the middle where you're in the process of selling a home and possibly buying another one or considering it. We're going to talk about some of the data points, and we're going to talk about the moves you need to be making around what's going on and where the real estate market might be heading in this video. This is JP from Blueprint for Prosperity, helping you to increase your net worth through relationship banking, maximizing your borrowing capacity, proper use of life insurance, and the ownership of real estate. I want you to like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity. So, as we already know, the real estate market the last few years has been pretty insane. From COVID on to current basis, we've seen dramatic spikes in prices on real estate. And to accompany those dramatic price spikes, in 2022, the Federal Reserve started to raise interest rates to combat inflation. In which case, now you have higher prices and higher interest rates, and the prices are not really decreasing at the rate to taper off the extreme hikes that we've seen in interest rates. So that means that affordability is insane right now. So with this being the case, you have many buyers priced out of the market. You have many people who may be in the middle of, transitioning from selling an existing home to wanting to buy another one for whatever varying reasons, who may be stuck now because they may not want to give up their cheaper mortgage or cheaper interest rate, or, and to cash out to go buy a home that's going to be magnitudes more expensive than what they're in. So it's just a real mess right now in the real estate market. There are some opportunities, but the reality of it for the vast majority of us is that it's a tough time to figure out where to be in real estate right now. So the latest updates in real estate is that the FHA, FHFA have come around in a massive attempt to completely slow down the increasing default rate on mortgages. So we have a real spike in people who are behind on their mortgages, and the federal government, for whatever amount of loans they're backing, are putting in measures in place such as loan modifications and other adjustments to push delinquent payments to the back of the loan, or make other adjustments to keep people in their homes. And, when you look at this from the basis of, doing good by the public and public policy, it's a good look. We definitely want to see people be able to stay in their homes and, not have to worry about where, what their shelter is going to look like, or being put out in rough economic times. So I definitely think, generally speaking, from a morality point of view, that the government may be making, the right decision. When you look from an economic basis, from the real estate market, and look at the numbers, there are some consequences and side effects from the moves being made by the federal government right now in their attempt to cut down the delinquency rate or completely halt foreclosures altogether. And the reality of that is going to be that this is going to continue to push on the inventory issue we have in the housing market right now. Those of you who may not be as familiar, we're millions of homes short for, our demand as far as buyers and renters in this U.S. economy, in the housing market. And when you have a scenario going on where the federal government is now intervening with the, natural cycles that may go on with like foreclosures or just the rough economic times causing hardship for many people, and intervening in that, it's not to say that, you want people to get put out on the streets to create opportunity in the housing market at all. But the reality of it, natural market cycles, this is a part of the inventory process. And the federal government stepping in on millions of potential homeowners defaulting or getting foreclosed on is going to keep the housing market significantly tight on the inventory side. And this is going to create upward pressure on pricing. Now, you have to keep in mind, in the midst of the federal government taking this route, you have the Federal Reserve on the other end who's lifting up interest rates in order to compress housing prices at the same time. And when you have a mix of market cycle or market demands of supply and demand, kicking in while you also have the federal government, keeping people in homes, not allowing the inventory to open up through foreclosures. You have the Federal Reserve looking to compress housing prices through raising interest rates. You have this crazy paradox going on in the real estate market where homes are still not affordable, and it's also de-incentivizing people to move out and sell their homes in order to get into another home, because that home is going to be more likely so much more expensive for them. So you basically have a scenario where you're having a tighter inventory issue going on due to federal policies by the government. On the other end, you have the central bank who's trying to keep, trying to push down on housing prices to keep it as close to affordable for working class and middle class Americans as possible. But you have inventory combating that at the same time. And so this is creating a crazy paradox that we all need to be paying attention to, because to be honest, if the government continues to intervene and you also have sellers who are, reluctant to sell their properties or sitting on the sidelines before they sell, this keeps the inventory tight. This could make the Federal Reserve's rate hikes less impactful. And you also have to keep in mind the federal funds rate from the Federal Reserve does not have the strongest impact on mortgage rates in the first place. The reality of it is the 10-year bond, the 10-year treasury has a deeper impact on mortgage rates, in which case the Federal Reserve could be raising the federal funds rate and mortgage rates could still come down due to other economic factors. So with that all being stirred into the pot and mixed in, this is creating a weird paradox where you could see interest rates still going up or maybe staying flat at a high rate, and prices not really coming down in many markets enough to create affordability at the intent that the Federal Reserve and the central bank has in mind. So it could create a bit of a stalemate in the real estate market, which, there's going to be winners and losers. So how do you adjust? What position are you in this scenario, and how do you adjust around it? Well, if the federal government is going out of their way to call it a success to completely halt the foreclosure process or delay out the foreclosure process for millions of homeowners potentially over the next coming years, already started that process in the next coming years to come, then again, that and the fact of homeowners sitting on the sidelines who normally might be selling right now, not selling, you're going to have an inventory issue. So if you're a first-time home buyer, then to be honest, you may have to assess your situation the next couple to few years. How far out of the market are you priced out? If you're priced out, can you work your way out of that hole through building your finances up and catching up to that and get into home ownership still? Or are you in a situation where you have to prepare to potentially rent for the foreseeable future? If you are a homeowner who's looking to potentially sell their property, but you're on the fence because you don't want to take on a much more expensive mortgage, if you're in a scenario where you don't have to sell your home, this could be a victory for you in the short term, because the likelihood is that the equity in your house is probably going to continue to build. At what rate is going to be hard to tell, because you have different factors working for and against the, appreciation of your home right now. But at the same time, the likelihood is that, depending on the market you're in, real estate is extremely local. But depending on the market you're in, you could see your housing prices appreciate while you're stuck on the sidelines, just giving you more cash in the end if you do sell in the near future or a couple years down the line. So again, if you are, a homeowner who's considering selling, or you're in a situation where you think you're going to have to sell, you have to weigh out several different factors. The continued appreciation on your current property, if it's still appreciating. The market you're looking to move to, is it more expensive? Are you downsizing? Are you going to a less expensive market? Is affordability a big factor for you? Is it working for or against your favor? You have a lot to consider if you're going from selling, one home and going to the next. If you're a real estate investor, then, it depends on how you're playing the game right now. Fixing and flipping is a dangerous game right now. Obviously there are people out here still doing it who run really efficient businesses and have, systems and processes in place that are making them efficient. But for those of you who are mom and pop fix and flippers, not a ton of experience, those of you who are considering getting into fix and flipping, you might want to be careful. You could be a falling knife right now because the market is so imbalanced in certain ways and it's so unpredictable and moving relatively fast that, by the time you complete a rehab, try to refinance, sell a property, put it on the market, you could end up in a situation with a serious shift in the value of your home that could completely throw your numbers off. So if you're a real estate investor fixing flipping, you got to be very cautious right now. If you are a buy and hold real estate investor, then if you have a system in place and you have the cash flow, your business is tight, and you can take down properties in an affordable market still, I honestly think that it could still be a good idea to continue acquiring rental properties right now because, the likelihood is that in most markets, the equity is going to continue to build. Not that should be your top, earning potential on your rental property. Equity should be a little bit more of the icing on the cake, if you're a buy and hold investor, that is. But I mean, the reality of it is you could see pretty reasonable appreciation in many markets because of the inventory shortage, even with the Federal Reserve's rates, and the interest rates compressing, trying to compress the pricing of housing. You could still see some pretty decent appreciation. Of course, you always are still getting your mortgage paid down, and rental demand is still relatively strong in many markets. So these are the different scenarios based on what position you might be in. If you're a first-time home buyer, I truly think that if you can, you might want to consider pushing up against that resistance and trying to get into a home because rents aren't showing a huge sign in most markets of coming down, let alone, at least stagnating in growth or offsetting in growth. So it's not really getting much cheaper to rent in most markets. Inventory being tight could continue to create rental increases, and the same problem could also continue to create increases in appreciation in primary residence in homes, in single family homes. So if you're a first time home buyer, it could be worth it if you're gonna buy a home that you plan to be in 7 to 10 years or more for you to fight that uphill battle and get into the housing market. Because to be honest, a real estate crash really doesn't seem very realistic. And it kind of seems, depending on how things shake out with the economy, inflation, the Federal Reserve having to raise rates, on and on, and the inventory issue at the same time, we could see a situation where housing prices don't stop growing. Now, how fast? Who knows? But in many markets, we could continue to see appreciation, even if it's just at a moderate rate. Again, if you're a seller or a potential seller, then this could be an opportunity for you, or it could be a risk for you. It depends on if you're trying to go, the home you're looking to buy or the market you're looking to buy in is more expensive or as expensive as where you are. Are the prices, going up and down in those markets? How stable? Are you coming off of a strong cash position? You have great equity in a home you're trying to sell? Or is it easy for you to sell that property? A lot to consider if you're a homeowner looking to sell. Real estate investors, if you're a fix and flipper, may the force be with you. It's tough right now. I would recommend continue to make sure you're looking at your numbers, pay close attention to your market, and have a backup plan of some sort. If you're a buy and hold investor and you have the infrastructure in place to keep acquiring properties, you could be in a good position, especially in the near 3 to 5 year term coming up. So, I just wanted to bring this to you guys. I wanted to give you something else to chew on as the economic data keeps rolling out, because I know many of you are in all of these different positions. You're in the stock market, whether it be your 401k or personal brokerage. You might be in the crypto market. You might be in the real estate market at the same time as a homeowner or a first-time homeowner, first-time home buyer, or whatever the case may be. You guys are in multiple segments of this economy. And so I want to continue to bring you data, bring you videos and perspective to help you make these moves on a daily basis, because things are changing fast. Data's changing fast. The economic cycle is shifting fast. It's getting rough out there. And the more information, the smarter you can move. So I know this content was valuable for you. I appreciate you spending the time with me. Comment down below on what position you're in the housing market, the real estate market. What type of moves are you making? What questions do you have? Leave them in the comments down below. As always, I want y'all to stay focused, stay in motion. I'll see y'all soon.